It is time to talk winners and losers on Wall Street. And to help break that down, we have Rob Black, our financial expert in the house. Rob, good morning.
Good morning.
Or good day, I should say.
Day.
So let's talk with a winner. First off, Vegas.
Yeah.
Now, they're getting less of their money from gambling, more from what then? And why is this a good thing?
Hotels, shows, shopping. So as an investor, there used to be something called the Sin Index. People always gamble. Gambling's on the decline in Vegas considerably. 61% of revenues now come from restaurants, high-end shops, amazing restaurants, amazing shows. 20 years ago, it was 64% of the revenue was coming from gambling. So in just 20 years, they've reinvented themselves. They've added 150,000 hotel rooms in the last 20 years. It is a play on a vacation more so than a play on sin.
It's more sustainable, do you think, going forward? Because the old saying was, Vegas wasn't built on the backs of winners.
That's right.
But now, I guess people, you don't mind spending the money as long as you're getting something out of it other than just the thrill of gambling.
I think the last time I went to Vegas, I went to see the Killers.
Yeah.
I spent a ton of money on dinners, a ton of money on hotels.
That's kind of...
I did gamble, but the money was elsewhere,
yeah,
for
but
sure.
The main draw was the shows, at least it is now. All right. Another winner you have on the list for us today is March Madness. Break that down for us.
March Madness now pulls in more in advertising revenue than the World Series. It's second only to the NFL Super Bowl. It's a big play for NBC's Comcast, for Fox. It's a great play for General Motors, AT&T, Nissan, Lowe's. It's regional. It's over 2 weeks. They could sell regional ads. They could sell national ads. It's fun to watch. It pulls in $262 million. The Super Bowl did. This is pulling in $153+ million for the World Series. If you add in all the local advertising, it's $900 million in a 2-week period. That helps the economy.
I never thought about that, but yeah, having that ability to play regionally and sell ads regionally, in addition to the national sales as well, probably just amplifies its ability to make money.
So Fidelity may want a national spot, whereas a local insurance company may want something more regional.
Yeah, not bad. Okay, let's transition to some of the losers you have for us today. Apple being among them. And why?
Sour apples.
Okay.
They take out an ad in the Wall Street Journal basically saying, you know, we're better than Samsung, Android's fragmented. This is actually really good news for Apple, but it's a pathetic tactic. Now that the Samsung Galaxy 4 is going to be released tonight, problems will start to arise. They won't ship as many as they want to. It won't be as innovative. It won't, you know, slice bread. But for Apple to take out an ad in the Wall Street Journal, it's not what Steve Jobs would have done.
Well, yeah, interesting you bring that up, because it was something I wanted to ask you about. It seemed like in the days when Jobs was at the helm, we didn't hear so much bad press, or there just wasn't so much grumbling about Apple. It was more awe, and now it seems like post-Jobs, more and more of these types of articles are coming out, and this sentiment on Wall Street.
They got to come up with a new product, and it has to be a $5 billion product, and those don't come out of hats easily, so they got to pull something out. It's going to be a watch. The watches are a $60 billion market every year in the United States. So they'll probably do a watch. They'll probably do a cheaper phone so they get their earnings growing next year, and by the end of this month, they'll probably announce something with that cash that they have, dividend and or massive stock buyback.
Okay. The other loser you have on your list is gold. I've been holding back, even though gold prices kept going up and up and up and up. I almost tried to buy some last week, but I didn't.
You're crazy. Anything that Glenn Beck recommends, I do the opposite. It's the Glenn Beck index of stupidity. He sees gold going to 3,000. I see gold going to 1,000. It's broken support. It's down from its highs of 1,900. It's at 1,500 now. It all started in 2001 after terrorist attacks. It's a play on fear.
Right.
We don't have a lot of fear right now. We got 10 glorious days in a row on Wall Street. I need a cigarette. It's so wonderful.
What was driving it? Is it just you can't trust the markets and the value of your money? Buy gold, because that'll always have value.
That's part of it. The Federal Reserve lowering the cost of money, printing money. Gold is a solid, hard asset. It doesn't change. An ounce of gold is an ounce of gold, but it's just not to me, it's just not an investment.
Okay. We also have a viewer question for you this morning. This one coming in from Ray. The old adage is, of course, buy low, sell high. And so he asks, with the markets at the highs they are right now, is now a good time to sell?
I don't think so. I think we're still going to see inflation out there, so anything that you sell and go to cash is going to lose to inflation. I say take a long-term approach. Look for something that you need in your portfolio, maybe financials. I think they still have a ways to go. Tech is underperformed. If you want some conservative, maybe go with utilities. There's always something that is working on Wall Street.
Fair enough. All right, Rob, thank you much. We'll see you again soon.